Hi there, my name is Jason Gold, and I'm back with another episode of Investor Insights. In today's episode, we're talking about the trust but verify mantra that investors have. What does this really mean? This means that investors generally walking around with a believability air to them so that they will listen to what you have to say. But they're going to take what you say and they're going to go out into the real world and verify that it's true. If it's true, they will take certain action. If it's not true, they will take other action. Sometimes that action is not so nice. So let's talk about this in a little bit more detail. Here's the thing. As a management team, you can tell investors any story you want. There's really no rule against it. I mean, of course, the SEC won't like it so much if you're telling them lies, but you can spin things kind of however you want. But investors are trained to sniff this out. Because remember, their job is first and foremost not to lose their investors' money. They want to make money for their investors. So they're going to go out into the real world and see if they can verify the claims that you're making. And if they find out that you're not being 100% truthful about the things that you're saying, they're going to react accordingly. And it's not going to be so nice for you. In the best case scenario, they find out you're not being 100% truthful, they'll ignore you and go the other way, and your multiple will suffer because no one believes what you have to say. In the worst case scenario, they go out in the real world and they find out that things you're saying are not true, they'll short the stock and create a campaign to expose your lies. That's going to become a massive headache and something that you should never want to deal with. In fact, you should do everything at all costs to stay out of the crosshairs of those kinds of campaigns. And the way you do that is by telling the truth in ways that can be verified in the field. So the advice that I give, which is kind of obvious, is to tell the truth, the whole truth, and nothing but the truth when you're talking to investors. And furthermore, make sure that any claim that you're making can actually be verified. Don't exaggerate your claims. Don't say that something sells for 3 when it sells for 1. Don't tell them that the upgrade path is in 2 months when the upgrade path is in 6 months. Don't tell them that you replace one competitor when the reality is you don't replace them, you're additive. Being too bullish in those situations can actually come back to bite you. Don't do it. Make sure that whatever you say is something that someone could go out into the market and verify on their own in the field. See, the thing is, this also works in reverse. If you tell the truth in a way that can be verified, investors will go out into the field and verify it. And if they find out that you're telling the truth, or God forbid that you're actually being conservative and there's more wood behind the arrow, they will become your best friends. They will buy gobs of stock and they will tell everybody that they know about what they found out. See, investors are chatty. If they find something good, they're going to talk about it. And if you have given them information that they've gone into the field to verify and is conservative, that works in your favor. See, investors love a story that they can verify. It gives them data to put in their model and it anchors them to something that makes their estimates different from consensus. See, investors want to own stocks where their understanding of the earnings power is different than the market. If the market thinks a company's going to earn $1.50 and I think they're going to earn $2.50, that to me is a reason to own a stock. And if I think that you're going to earn $2.50 because I've gone into the market and I've tested the theories of my model in the market and customers are verifying all the things that I'm saying and they're more bullish than what management is saying, giddy up. That's the kind of story that people really get behind. So how do investors actually go out into the market and prove out these things and verify the things that you're saying? Well, the secret really lies in their use of something called expert networks. Let's talk about how the expert networks work. Let's say I'm researching a company and I want to know how their new product is selling. I'm going to contract with a network. I'm going to pay that network something like $1,000 or $1,200 an hour. And I'm going to ask that network to go out into the marketplace to find me customers of your product. I'm going to ask the network to go find competitors to your product, distributors of your product, former salespeople of your product, current salespeople at your competitors, anyone and everyone that I can think of that interacts with you and your company and your product. I'm going to go out and talk to them. I might even be doing some background work on you, the CEO, or you, the CFO. I might talk to your former colleagues. I want to understand if you're a liar or someone who's generally conservative and tells the truth all the time. So I pay the network, let's make the numbers round. I pay the network $1,000 an hour. They serve up a series of experts to me, and this isn't rocket science. They go to LinkedIn, they go to conferences, they find people that match the profile that I've given them. And the reality is, if you're a popular stock, 15 or 30 other investors are doing projects the same way as me. So there's a group of investors who are out there doing projects the same way that I am. So there's a group of experts that have already been researched to do this work. So I pay the network as the investor $1,000 an hour. The network pays the expert $400 or $500 an hour, and they keep the delta. And then they arrange a call between me, the investor, and the expert. And for an hour, I ask this person anything I want. Now, to be clear, while this sounds a little bit like insider trading, it really isn't. The networks went through the ringer several years ago, and now they have compliance systems up the wazoo. People aren't allowed to talk about insider information. They're not allowed to talk about their own company. There's a whole list of things they're not allowed to talk about, and I'm not here to provide legal advice or legal guidance to anyone. I'm here to explain how this works, that investors pay an intermediary to get them on the phone with people that know things that they want to know. We want to expose the things about companies that the company doesn't want to tell. So if your product isn't working, we're going to find out about it. If your product is working really well, we're going to find out about it. If your product is selling at half the price you said it's selling for, we're going to find out about it. And if your product is selling for twice the price that you say it's selling for, we're going to find out about it. Now look, the information isn't perfect. For sure there are situations where misinformation is conveyed. And sometimes stocks react on that, and it's up to management to know what's going on and to fix that. And in fact, in my clients, I often contract with the networks myself, and I do many of those calls on behalf of the company to know exactly what the networks are saying about the client. Because the more that my clients are prepared for what investors are saying, the better they can be in answering their questions. And it forces them to be that much more honest because they know what's happening out there in the field. So the bottom line here is that investors are figuring out exactly what's going on at your company with your product by talking to everyone around you. And it's perfectly legit. And so this is why you need to always be on your game, telling the truth, the whole truth, and nothing but the truth in a way that can be verified. If you do it wrong, it will come back to bite you. If you do it the right way, it will absolutely help you. People will see the benefits of what your company is doing. They will trust you that much more, and they will reward you with a higher multiple. That's it. This really boils down to one thing. Tell the truth all the time in a way that can be verified, because whether you like it or not, investors are going out into the market and they are doing the work to verify the things that you're saying. That's it. Again, my name is Jason Gold. Thanks for tuning in to another episode of Investor Insights, and I look forward to seeing you here again on another episode.